PPI final demand falls 0.3%, which is quite a drop for an index that was up 0.2 the month before. I'm sure, waiting for the details to drop, but I'm sure that's probably energy related for the most part. The energy, the core rate, ex-energy, food, and trade comes in flat at 0.0%. That's down from a 0.2 gain, and both of those numbers are below what analysts had expected. The year-over-year final demand falls to 1.1%. Let me get you in a second historical on that, and the core falls to 2.8% for the year. So we are seeing a big drop in prices at the wholesale level. Now, of course, Tom, as you mentioned, they don't translate directly into consumer prices because the middleman gets in there and has some say about what things cost. But it is a sign that the lower level price from the bottom up prices are starting to fall backward, and it would just reinforce the Fed's idea that maybe they pause today.
Mike, it used to be easy. There was like the beginning of the factory, the middle of the factory, and final demand, what came out the door. You've lectured me it's more complex today. Which part of PPI has your attention?
Well, Tom, we generally like to look at PPI for final demand, trade services and energy and food, because that's essentially a core rate. The trade services is not trade in the international sense. It's basically the margins received by wholesalers and retailers. So you get a picture there of what's going on at a lot of companies. Now, the decline in the overall final demand number was, as I said, due to energy prices. Gasoline prices down 13.8%. Energy prices in general down 6.8%. Food was down 1.3%. Remember when food was a big part of the CPI, so we may be seeing some benefits there. Services moved up 0.2%, but that's down from a 0.3 the prior month, so maybe service prices are starting to come off a little bit. And I'll leave you with one interesting number here. An index for iron and steel scrap fell during the month. Remember when Alan Greenspan was chairman of the Federal Reserve, he used to look at steel scrap as an indicator of how the economy was doing. It's where you sell your old refrigerator or your stove. They melt the steel down and make it into something else. And if prices are going down, there's less demand for steel. And that means the economy might be slowing. It's an interesting concept to follow. I'm not sure if it's so accurate these days. We haven't looked at that in a long time. But it did pop back into my head, this remnant from the Greenspan days.